Thanks for joining us. I'm Marlin Bohling with a look at our ag commodity trade. Well, we started under pressure this morning in some of the grain markets. Let's take a look at what we're doing now with these quotes provided by Bar Chart. We start with corn. Well, corn taking a decided nosedive here this morning with the December contract at $3.90 3/4, and it's down 4 1/4 cents. You know, in that overnight trade, we got as high as $3.99 1/4, within a penny of hitting $4, and then backed away from it. Now we're almost on the low of the day. Now on the soybean market this morning, and again, I will remind you, we had no overnight export sales to report. That could be partially because the government offices are shut down today. But with that lack of news, soybeans really taking some profits here this morning, apparently. November down 17.5 cents. We're at $10.48 per bushel. That's within about a penny and a quarter of our low of the day. This is after a high overnight of 10.73.5. So 25 cents off of our overnight high. That's a lot of backing and filling taking place here all at one time in the soybean trade. Now on the wheat in Chicago, December is down a penny and a quarter at 5.92.5 per bushel. It had been higher. The Kansas City market has December currently 5 cents lower at 5.30.5 per bushel. And in the Minneapolis spring wheat trade, we have December now up a half cent at 5.44 1/4 as it seeks to kind of correct that spread a little bit. In the cotton market this morning, we have the December contract up again by 115 points, and it's at 68.79 cents per pound. Overnight, it got as high as 69.32, so another big push in the cotton market. We are joined by Chris Swift of Swift Trading Incorporated. He's based in Nashville. And Chris, big moves downward here today to get things rolling for this week. A lot of folks wondered why that didn't happen last week, I guess, but is it past due? Is it due? Is this a one-day wonder? How do you look at this?
I think there's a lot of combination of factors going on, but one of the things that I noted this morning, they've got some moisture coming into South America, so that'll help their planting up tremendously. We noted that they had been a little bit dry down there, so with this upcoming moisture, that should help their planting. And it's so perfect here in the United States for harvest weather. You got a premium to the spot month. They're probably selling a lot of beans right off the combine. So it's kind of a combination between the really good harvest weather here and getting a little drink of water down south there for the new crop coming in.
So it looks like the commodity funds added about 9,300 contracts to the long side last week, and now they stand at 238,000 contracts on the long side. And a lot of folks were telling me last week they thought it could be more like maybe 275 or more. And it was kind of a moderate gain, actually, in that position. How do you read that?
Well, and it was quite a bit lower than what they had thought of estimations there. And of course, the funds love to ride a trend, and this has been a pretty hot and heavy trend of the market going up. But there's also the fundamental aspect of it. You know, a lot of farmers are going to market a lot of grain, and most of those funds have no desire to take delivery of that grain.
Well, of course, with all the rapid harvest activity, where do you think the number could be for harvest activity and harvest progress when the numbers come out here tomorrow for corn and beans?
I think it'd be close to 50%. The weather has just been excellent, and it would not surprise me that with all of last week moving, that you could be as much as 50% in the corn and maybe 41% in the beans. Doesn't
seem like a lot to stand in the way of the active harvest. Is that going to cause a backup at the local elevators, do you think, or not?
I think it already has. I've seen some of the pictures of the miles of trucks just sitting there waiting to get in. Of course, we start the same thing over again where we start dumping a lot of it onto the ground. So we have a lot of storage on ground, and as long as it doesn't start pouring down rain before they can get some cover on it, that'll still be good corn.
Okay, and I know I did ask somebody last Friday, I believe, if there would be any rail car shortages this year, and they didn't seem to think that that would be a problem this year. But it does bear watching because everything is going to be coming in short order, the way it appears. Chris, we're going to break right here and then come back, and we'll take another look at our cattle and hog market activity here on a Monday. We're talking with Chris Swift, and we'll be back in just a moment. Let's look at our live cattle trade this morning in the early going, and we opened up. I think we were narrowly mixed. Let's see what we're doing right now. Currently, we're turning decidedly lower now. We have the December contract down $1.40 at $111.20 after a high this morning of $112.87. Wow, how's that for a turnaround? That's about $1.65 off of our earlier high this morning. And now within about 15 cents of our low of the day. February down 80 cents at $113.50. And on the feeder cattle market this morning, you have November currently down 47 cents. We're trading at 135.05 per hundredweight, and this is after a high early this morning of 136.50. That means we're about $1.45 off of that now already. Who threw that banana peel in there in the cattle market anyway? On the lean hog trade, December down $1.05 at 66.07. Another big sell-off after strength early on. We got as high as 67.32, and now we sold off about $1.30 off of that. What's going on here, Chris?
Well, just a pointed question there real quick. I think they traded 109 for cash last week, but we're still producing the same amount of beef. We were a few tenths of a percent higher week over week and year over year for our beef production. So even though we're killing a few less cattle, we're still creating the same amount of beef, if not a little bit more than last year. The feeder cattle market is probably more drought related. We're seeing a lot more calves have to come in, and that might potentially push that cow kill up a little bit too.
I noticed on the beef cutout report that came out Friday afternoon from USDA, we had a sell-off in the price of the choice cuts and also on the select cuts. Choice cuts down $1.94 and selects were down $3.28. The choice cuts at $214.06 would be, what is that, over $4.50 off of what they were a week before that. You would think they can't keep that up forever and still keep the cash market going higher.
Well, and I think there's a lot of truth to that. The consumer themselves seem to have fallen into their habits and be well adjusted. We've noticed that a lot of the football game viewership has declined significantly, so there's probably not as much of a party atmosphere right now that would consume a lot more beef since the football games aren't here. But I think that's what we're noticing more than anything, is that consumer is just at a pretty level purchasing power right now where he wants to be.
On the pork cutout side, Friday afternoon, for the carcass values, looks like we had just a little bit of a decline. We were down 56 cents. We were priced at $94.80 per hundredweight. We had the ham market down $2.02 at $71.72. The bellies up $2.30 though at $163.28. And we'll get a new mid-morning update at about roughly 11 o'clock Central Time today, providing the government offices will put that information out, and I do believe they will. All right, thank you very much, Chris. Good to talk with you again. Chris Swift of Swift Trading Incorporated, based in Nashville, Tennessee. John?
Thank you, Marlin.